Hello traders, welcome back to my channel. This is Forex and on today's video I'm also going to show you, just like yesterday I made a video on step index 200, how you can use the psychological levels to trade. So today I'm going to be talking about the main step index, because we have three step indices: the step index 500, 200 and the step index, the old one. So now I'm actually in a trade, but I'm going to show you how I used the psychological level to get into this trade. So first of all, just like yesterday, I made a video. If you go to the channel, you see the last video I posted on step index, so as to understand in depth the concept of or how to use the psychological levels. So now this is a 30 minutes time frame. You can see how nicely this market tapped into this other block. You can see that. So now I'm only seeing that the market tapped into the other block, but before you enter the market you need other confirmations. So as to be sure, you can see this liquidity. This is a liquidity graph here. You can see anytime the market takes out, it can be equal lows or single low or high. Like this place now, we're having double bottom. There's a liquidity there. The market has taken it out already. So whenever the market takes out equal highs or equal lows, it must most times it tends to reverse a bit. So but you are going to get a reaction. So now you can see how nicely the market took out this liquidity, then tapped into the other block. But actually in this video I'm going to be focusing on psychological levels. I'm not talking much about other blocks and liquidity. So immediately the market tapped into the other block. Now I needed an extra confirmation, but knowing too well that step index works well with psychological levels, so that is what I'm going to use to confirm. So let me go ahead and start plotting the psychological levels. I'm going to remove this black line. So how do you plot the psychological levels for step index? So like I said, if you look to the right, you see these numbers. You can see there are 4 numbers before the digits, the dots. That's the decimal, right? 4 digits before the decimal. So if you focus on these 4 digits before the decimal, and then you count in 50s, like count in 50s. So let me show you the example of what I mean. So if I place randomly this blue line, let's set it. So remember, you count in 50s. So first of all, you start with 8,000. The next one is going to be 8,050. So save. You see where the line placed itself at 8,000. Let's add another line. I'm going to bring this one above. It's going to be 8,050, right? You see this? So let's put one below. This one is going to be 7,950, right? So you can see this. You can see how the numbers are increasing by 50. 7,950, 8,850. So that is the psychological level for step index. The same thing with step index and step index 200. I'm still going to make video on step index 500, and then other pairs like the VIX 10, VIX 75, all the pairs, they all have their psychological levels, even boom and crash, especially boom 1000. So now you can see how I was able to take this trade. If I go down to 15 minutes time frame, you can see nicely how the market tapped into this order block. So I was expecting, I know that if I go back now to, let's say, 30 minutes time frame, and if I go to the left side, just observe how the market is respecting this line, this psychological level. I don't know if you are seeing this, or should I zoom in? See how the market is respecting. Anytime it gets to the line, it will react. You can see how it's bouncing around the line. Keep going left. If I add more above, you see that this place is now psychological levels. See what the market is doing. You can see this. See how it's bouncing. So you use the psychological levels, you add it to your confirmation. So first of all, you define the trend of the market and then take advantage of it. You can see how the market tapped into the order block here and then was going up. So in order to confirm, I needed it to break above the psychological level, then retest the psychological level. I already know that it's going up, it's about to go up, but I needed an extra confirmation, that is a breakout of this psychological level and then a retest. So now, before I waited for the retest, you can see even now this reaction, this zone, I'm talking about the order block now, is still very close, like it's around this. Just expect a reaction around the psychological level, though most times it will react exactly at the psychological level. I hope you guys are understanding what I'm saying. You can see this reaction here is exact at the psychological level, while this one is around the psychological level because it has to tap into the order block. So you combine all this knowledge. So after the breakout and the retest, I waited for the retest, then I entered. So now I'm going to bring back the trade position. So you can see this now. See how the market reacted to the place. Let's go down to 5 minutes. You can see the reaction from 5 minutes. If you go down to 3 minutes time frame, you can see exactly the kind of reaction it used at that order block. You can see the W pattern. This is a sign of reversal, but I just needed it to be above the psychological level before I took the trade. So you can go ahead and add more lines. I can actually add more lines, more psychological levels to the screen, and wait for the market to get to it. So in doing your top-down analysis, you first of all define the trend of the market. Then you trade alongside the trend. If you consider this or look at this trend now from 15 minutes time frame, you can actually say that this is an uptrend. This is actually an uptrend from 15 minutes time frame. So all you have to look out for now is how the market will react to a demand zone or above the psychological levels. So you have to be looking for buys, not sells. So when you define the trend, you trade alongside the trend. So that's how this works. You can actually see this now. See this rally, base rally here, the other block. Because you can actually ask yourself, why did the market react to this particular order block? Or why did the market reverse from here? It's because it got to another block. So guys, just go ahead and plot these things on your charts and then practice them so you get familiar with it. Alright guys, I don't want this video to be long. Please, if you are new to my channel, please subscribe to the channel and like these videos. Thank you.